Good evening and welcome to CNN. My name is Frederik Horn and we are going to talk about the European Monetary Union since it is exactly 20 years ago from today that the EMU was established. I'm going to give a brief explanation of the Euro and the European Monetary Union, and our experts are going to discuss its effects that the European Monetary Union had on its members. The European Monetary Union, or the EMU, represents a major step in the integration regarding EU economics. EMU launched in 1992 and involves the coordination of fiscal policies and economics. It is a common monetary policy and a common currency, the euro. There are 28 countries in the EU, and a lot of them have taken the step further and adopted the euro, and together all of these countries make up the euro area. This decision regarding the common currency, the euro, was taken by the European Council in Maastricht, the Netherlands, in December 1991, and was later enshrined as the Maastricht Treaty. The process of the economic integration started in 1957, and the Economic and Monetary Union takes the EU one step closer. The treaty was taken into action November 1st, 1993. And now we're going to one of our experts, Jennifer Cheng, where she'll discuss the advantages of the EMU.
Thank you very much. There are several advantages that make the euro quite an attractive currency. The advantages of the euro range from transparency of the currency to the euro's discipline against inflation. So the advantages are as follows. Number one, transparency. Due to neighboring countries sharing the same currency, producers and tourists can easily compare the cost of international goods, services, and resources. Number two, lower transaction costs. There are lower transaction costs due to there being no commission payments when it comes to the financial intermediaries. Number three, certainty and investment. The euro creates a sense of certainty among investment, which make them more willing to invest because investors can easily predict the price of imported raw materials and can set the price of their exports. Number four, trade creation. There is an increase of trade between members who share the same currency because of the several benefits of sharing the same currency. Number five, job creation. Due to the increase of trade, there will be a higher amount of employees in those industries that experience the increase of trade. Number six, discipline against inflation. Members of the euro cannot devalue their currency to get out of the economic hardship. And the last one, but not least, the political gains. There is an increase of relations between countries who trade with each other, and therefore countries in the euro create a strong economic and political relationship with the other members. Now, that was a lot of talking. Back to the studio.
Thank you very much to our expert Jennifer Cheng for discussing the advantages of the EMU. And now we are going to go to our other expert, Hamza to evaluate the disadvantages of the EMU.
Thank you, Frederik. Well, with the euro comes some disadvantages as well. First of all, once a country becomes a member of the euro area, national central banks, including the Bank of England, lose their ability to use interest rate policy to achieve independent macroeconomic objectives. Following the financial crisis and global recession hit countries like Greece were not able to reduce interest rates unilaterally. All the EU countries have different economic cycles or at different stages in the cycle between boom and recession. The UK economy, for example, is currently growing reasonably well, while Germany is having problems. This is the reserve of the situation in 1990. Crisis of the EMO state that the creation of a single currency will abolish the policy option to set interest rates separately at the level appropriate for each country. Experts also warned that the monetary union can only be a success if the whole area is covered by the single currency and it has the same legal framework, taxation, labor, laws, etc., and a labor force which is highly mobile. Thank you very much. Back to the studio.
When the euro was introduced in 1999, Denmark joined as a non-euro country of the European Monetary Corporation, also known as ERM2. The policy has provided a stable anchor for low and stable inflation expectations. Denmark participates at a central rate of 746.038 kroner per 100 euros. Central rate is a conversion of the existing rate against the D-mark and was last amended in January 1987. The EMU is a method of constructing a consistent, contradiction-free monetary order in Europe. The only feasible alternative under free movement of capital are flexible exchange rates. That is the system that we currently have. Thank you very much for watching CNN today, and hope to see you tomorrow.